Hello and welcome. Joining me in studio is Lucy Pilko, CEO Americas of AXA XL. Lucy, let's dive right in. So I know that you are working really closely with mid-sized, large-sized corporations, talking with clients on a pretty regular basis. So maybe you can share a little bit about what you're hearing from them, what's keeping them up at night.
Yeah, I do. I do invest a lot of my time day in, day out, really trying to engage with clients and understand their perspectives and where they're coming from. And I don't think any of us who read the news every day could argue that they're facing a pretty complex environment from both a macroeconomic and from a political landscape perspective. You know, we had jobs news, political news, and really there are a lot of questions out there about what's going to happen with inflation, with interest rates, with policy, with growth or recession. And so, you know, executives at our clients and their senior risk managers are spending a lot of time thinking about the trade-offs that they have to make in terms of where they put their investments. Are they investing in acquiring new companies? Are they investing in new technologies? Are they investing in streamlining their cost structures? And so, you know, really trying to think through how they want to grow and evolve their business. And so from a risk management perspective, this means that the conversation is largely around the total cost of risk and what that means to an organization. And so, you know, from a silver lining perspective, for us, it means there's a lot more thinking going into identifying, preventing, mitigating risks. And it means that the conversations that I tend to have with these executive teams goes well beyond traditional insurance. So yes, of course, insurance is a really important tool for them in managing that risk, but it's also about how do they think about their own captive management? How do they think about alternative risk transfer capabilities? How do they think about the services that they need to do those activities of identifying, preventing, and mitigating risk? So it's a pretty robust conversation.
I can imagine.
That we're having, yeah.
I mean, maybe tell me a little bit about the nature of those conversations.
Yeah.
So you kind of dug into what the outcomes might be from them,
Yeah.
but what does that engagement look like?
So I think, you know, thematically, some of the topics that we're spending a lot of time on at the moment, you know, include things like climate change and what that means for their portfolio of locations and property assets, and how they think about preparing for weather events, which, you know, we're smack dab in the middle of hurricane season, and so that becomes a topic that we engage on. You know, similarly, we're having a lot of conversations about cyber risk. The recent CrowdStrike event, you know, clearly put this top of mind, not just for risk managers, but for CEOs and boards and executive teams about how their company might be exposed to various types of cyber risk and how well prepared they are to respond in a resilient way. So those are a couple of the themes, but it covers sort of all manner of risk types.
Got it. And then what, right?
Yeah.
So how is AXA XL going about helping kind of create product services that address those needs for clients?
So I guess I would emphasize two big themes in terms of what we're doing. And the first one is collaboration, and the second one is expertise.
Love that. Yes.
So on the collaboration front, you know, I personally and my entire team, I would say, is very much in active listening mode. And, you know, why is that? It sounds like kind of a basic thing, but you can't solve the problems in a meaningful way for clients unless you really understand the very specific context that they're up against. So from a collaboration perspective, we're doing a lot of things to be better listeners and therefore better responders. The first is we're really investing in our client relationship teams. We've always had individuals on the ground who are tasked with really understanding the holistic set of risk and insurance needs that a client might have, but we're really increasing the size of that team so that we can be face-to-face with more clients and make sure we're deepening our understanding there. Secondly, you know, we are reorganizing our business. I just spent the last few months putting our teams into different configurations, specifically organizing around client segment. And we're doing that to make sure that the products and the knowledge and the capabilities that are best suited to different types of clients are easier to navigate to within our organization.
That's an interesting one too, because you mentioned the total cost of risk, and you're bringing together all of the right people so they can consider the total need to address the risks as well.
That's right.
Have comprehensive conversations with all the right players.
It's not the same to deal with a small manufacturer as it is to deal with a global airline, and so we really do need to make sure that we are putting ourselves in the client's shoes and understand what's going on, from their perspectives and the things that they're working on. Similarly, we're then empowering those teams with more authority and autonomy so that the decision-making can be faster. There's a lot to get done on any executive's plate, and so we want to make sure that the experience of dealing with us is efficient and effective. And so in all of these different ways, we are really spending time investing in understanding and then tailoring solutions to those client needs.
Got it. And then you also mentioned expertise.
Yes.
Some of that is kind of alluded to and hinted there, but can you dig in a bit more to that?
Yeah, I think risk management teams in organizations tend to be lean, and so they don't necessarily see the breadth and depth of risk and claims that an insurer might see. And so we're really spending a lot of money and effort in investing in places where we think we can provide differentiated expertise that matters to clients. So a couple of examples of that. One is around energy transition. Many companies are thinking about how they become less reliant on more traditional energies and make themselves, more fit for the future from an energy perspective. So we're building a lot of capabilities around new technologies and new energy sources so that we can meet clients and support them in whatever pace and direction of journey that they're going down. Another example, I had mentioned it earlier, is around cyber. So we've built a cyber center of expertise that leans into the fact that we are one of the leading cyber insurance providers, and takes advantage of the fact that we can see the experience of so many different companies in preparing for and defending against cyber attacks. And so we can pass on that knowledge in lots of different ways to our clients through data, through services, through how we think about structuring policies to best support clients in an appropriate way. So those are a couple of examples. As I mentioned earlier, it's also really thinking about topics like captive management and when risks are best kept on the balance sheet of a corporation, and when those risks are best transferred and shared to the insurance and other financial marketplaces.
Got it. That makes a lot of sense. I mean, there is a lot of expertise, it sounds like, within the firm. What's next, right? Like, what should those same kind of clients and companies be thinking about going ahead?
Just like the macroeconomic and political landscape feels a bit choppy, I think in some ways the commercial insurance marketplace, presents itself as choppy to clients right now. And that's because there are different dynamics within different product areas. There's different levels of capacity. There's different loss trends and litigation situations. And therefore, one of the things that I think clients do have to anticipate is that rates may move in different directions for different products. And so one of the things that we are doing is really making sure we're investing in our communication out to clients and to our distribution partners so that we can make sure that we can describe clearly what are the drivers of change in different marketplaces so that clients can better anticipate and plan for the cost of insurance within their overall risk landscape.
That communication seems really core, though. I mean, it's almost like you're functioning like you're not a vendor, you're a partner.
That's exactly the way we see it. That if we're not solving problems that matter to the client and bringing expertise to what is a complex and ever-evolving landscape, we're not doing our jobs. One of those areas that I think has been particularly sensitive and complex recently, and I don't think will get any simpler in the coming months and years, is around casualty right now and the litigation trends that we're seeing. And so, I think from our perspective, it's really helping make sure that clients understand the dynamics from a litigation and a claims perspective. And for us, we're really investing in beefing up what is already a market-leading claims capability in order to make sure that we're really there to support our clients when those situations arise. Casualty, pricing, reserving, and claims will continue to be, a really hot topic.
What others? What other trends are you kind of following and innovating?
Well, as we talked about with things like, with cyber, with property, the risk world is moving just faster than it ever has before. And it's moving in different directions. And so, one of the things that we're seeing is that the traditional admitted markets aren't always the best place for those risks for clients. And so we've been an active participant in the E&S markets actually since 1979. We're a long-standing player in that space, but we are investing in deepening and broadening our capabilities there because we see that clients are gravitating towards those markets for certain risks that are complex, hard to place, or sort of bordering on the uninsurable. And so we think that is a really important space within our overall industry context for innovation, and that innovation is going to matter because risks are moving faster and faster. One example of that, which is a particular passion area for mine, is around AI. I think we all hear a lot about the potential of AI, and getting to that potential requires a lot of experimentation on the part of companies and clients, and experimentation takes risk, and it exposes you to risks that we haven't faced before. And so no one knows all the answers. I mean, almost by definition, this is an emerging space. And so our commitment to our clients and our distribution partners is to be part of that ambiguous conversation, and to sit shoulder to shoulder in trying to anticipate and scenario plan and understand what kind of exposures and outcomes might come from investing in AI. And just to be clear, we want companies to invest in AI. This is the future of where the world is going, but it does change the landscape of risks that clients are facing. And so what we want to do is solve it together with them as we all learn more about changing risks, legal environments, and the like. So it's a particularly fun and exciting and energizing place to be.
Love it. Well, thank you for watching. Once again, I was joined by Lucy Pilko, CEO of America's AXA XL, and you're watching Insure TV.